Hi, and welcome to this week's videos, taking a look at what we can expect in the coming days. So this week we're going to take a closer look at the upcoming FOMC meeting minutes. We're going to take a look at UK inflation and retail sales data and key corporate earnings. And it's worth noting that includes Nvidia, which could well shake the markets up a little bit. So we'll start with the FOMC meeting minutes. Everybody's basically waiting for these. They come out on the 19th of November at 9 p.m. GMT +2. And traders are going to be looking for clues about the Fed's next move, especially after the rate cut that we had in October. Now, most analysts believe another cut is coming in December, but there are still some reasons for caution. At the October press conference, the Federal Reserve Chair Jerome Powell struck a more hawkish tone than everybody expected. He also noted that some committee members might prefer to wait, given the lack of fresh economic data due to the recent government shutdown. Now, although the shutdown ended on the 12th of November, it did delay key September and October reports, leaving policymakers with less information. Some of that may trickle back and we may see some changes. Now, according to the FedWatch tool, as of the 13th of November, the market currently prices in just over a 50% chance of another 25 basis point rate cut. Now, that means the release of the FOMC minutes could easily spark some heightened market volatility. So they're going to be key, and do keep your ears and your eyes open. Next up, we're going to turn our attention to the UK and the UK inflation rate in particular. Now, the IMF recently warned that Britain is set to face the highest inflation rate in the G7 this year and next, averaging 3.4% in 2025 and 2.5% in 2026. Now, we all know the Bank of England's target, of course, is 2%. Now, the Office for National Statistics will publish their latest inflation figures on the 19th of November at 9 a.m. GMT +2. Now, Chancellor Rachel Reeves is preparing for her crucial budget on the 26th of November. And in the UK, we're expecting some tax rises and spending cuts to strengthen public finances and shield the government from market turbulence. Although very recent, the last couple of days, there's been a bit of U-turn on increasing rates of income tax. Now, as that budget deadline approaches, the actual inflation data may trigger significant prices in the stock market. In September, the UK's annual inflation rate held steady at 3.8%, which was below the expectations of 4%, helping to support the FTSE 100 index. Now, this time, analysts expect a slight dip to 3.7%. Now, that's still way above, obviously, the 2% target. And if inflation does surprise to the upside, it could weigh on UK equities. Okay, we're going to stick with the UK for the moment, and it's time for the UK retail sales figures. Everybody in the UK will be looking at the figures and the data that's due to come out on the 21st of November at 9 a.m. GMT +2. Now, in September, British retail sales unexpectedly rose 0.5%, giving a boost to overall growth, thanks to strong tech sales, including Apple's new iPhone model, and higher gold demand from online jewellers. Sales volumes increased 0.9% in Q3 and were 1% higher year on year, supported by warm weather in July and August, which lifted clothing and non-store activity. Now, as a result of all that, the British pound showed mixed dynamics but strengthened against the euro and the US dollar for a period of time. Now, some analysts are expecting negative data for October. If that does happen, the British pound may weaken. And of course, positive figures may well cause the exact opposite. So those figures will be quite key for the GBP moving forwards over the next few days. Okay, and last but certainly not least, this week, it's the corporate earnings reports. Now, let's talk about this quite closely. All eyes this week will be on Nvidia, one of the main drivers of the AI boom. Now, they're going to publish their earnings report on the 19th of November after the market has closed. Now, you've probably noticed there's a lot of talk and a growing debate about whether AI is a bubble or the next big thing. And Nvidia's results could play a key role in shaping that discussion moving forwards. Now, given its dominance in AI hardware, the company's report could trigger major volatility, especially if results fall short of expectations. Now, some analysts are warning that AI stocks are now more overvalued than dot-com names were back in 1999, and the top 10 S&P 500 firms are increasingly detached from their earnings. So even strong results might fuel fresh concerns about sustainability and valuation risks. So prepare and use your risk management tools wisely this week. Now, to sum up, this week's market outlook is all about central bank signals, UK inflation, and the power of big tech. Overall, it's shaping up to be a week with some potentially very high volatility and key market drivers in play. So stay alert, use those risk management techniques, and manage your risk carefully. Keep up to date, and with real-time updates, visit the news and analysis section on the FX Open website. Well, thanks for watching, and as always, we wish you luck with your trading in the week ahead.